Welcome back. You're tuned into Bazaar Morning Call. Well, to help us out with some fundamental analysis, we're joined by Dipan Mehta, Director at Elixir Equities, who joins us on the show. Hi, Dipan. Good morning. Good to see you, Ben. Dipan, what's your view on Infosys? Rima just mentioned before we went into that break that the promoter entities, they have decided not to participate in the buyback. And the buyback price obviously is much higher than the current price. Now, when the promoter is not participating, the acceptance ratio goes up. And it shows that they don't want to take money off the table. I mean, they want to stay in there. They want to hold on to the stock that they have. Your view on this particular move, as well as on Infosys as a stock?
Good morning, Najil, and thank you for having me on your show. I think it's a very positive move by the promoters, and it shows a lot of faith in the stock and the IT industry at a time when there are so many doubters, including us. So there's going to be a great arbitrage opportunity, I think, and certainly, you could buy some shares, offer it in the buyback, and then sell off the rest of the shares post buyback. And for existing investors, of course, they should offer shares in buyback. So I think these opportunities come. I think they're more like exit opportunities for existing investors. And I think a lot of traders, arbitrageurs will take advantage of this particular corporate action. But by and large, we still remain unconvinced about the short, medium, and long-term prospects of the IT industry. As a thumb of a rule, we want to buy companies which can grow higher than the nominal GDP growth rate of India. And I don't think software services companies, by and large, are meeting that criteria. So for us, a whole host of software services companies are an avoid. There could be a few exceptions. We've discussed from time to time the likes of Persistent Systems, maybe NewGen, Orion Pro, which all have a different business model or are very focused on a particular vertical where they have key strengths or on a particular client where there's good volume coming through.
So participate in the Infosys buyback if you are a retail shareholder?
Yeah, Rima, absolutely. I think.
Okay. 1,800.
How much ever goes great for investors.
All right, that's useful advice. So, when we spoke to you on Monday, Dipan, you were telling us that SEM India, which was earlier known as ITD Cementation, owned by Adani, is a stock that you're going to buy on Murad Day trading. What else did you purchase yesterday where you have a lot of conviction at these levels?
Yeah, Rima, first of all, a disclosure that we have already invested in SEM India for past several years. It's been a great multi-bagger stock. And I still feel that there's a lot of scope for decent returns in this company from these levels as well, because of the reasons that Adani Association, of course, and good order book position and certain technical skills. Having said that, I think we haven't bought anything this particular. In fact, we have sold. So the only trade I did on Murat was to sell HDFC Bank. I'm very negative, I would say neutral to negative on the banking sector, especially large banks. That entire industry is becoming extremely beyond red ocean, I would say. And these kind of net interest margins are just not sustainable. So although the larger banks may have 15, 17% type of loan growth book, but I don't think it will percolate to higher net interest income because of lower net interest margins per se. And by and large, I think the best days of the large banking industry are well behind them because of the competition. So I want to avoid all the larger banks, especially the private sector banks.
So you completely exited HDFC Bank now, and the fact that NIMs are not sustainable. I thought the assumption is that in Q2 NIMs bottom out and it's going to be a U-shaped recovery in NIMs. So why do you think NIMs are not sustainable? And do you own any private sector banks, or you've completely out?
Well, see, I agree. There could be nominal up moves in the net interest margin, but on a broader level, 3 years, 5 years, 10 years, these net interest margins are going to come off significantly. And look at the numbers which have come through from the larger banks, be it ICICI, Axis, or HDFC. Their net profits are just not able to grow beyond single digit, and that's very disappointing from an investment perspective. So we are in the process of exiting almost all the private sector banks, which we have held for decades. I mean, HDFC, IndusInd, Axis Bank, ICICI Bank, they've been in our portfolios and our client portfolios for a really long time, generated great amount of wealth for us as well. But I think the entire complexion of the industry has changed, and now it's extremely competitive. The main reasons why the private sector banks did very well because of technology and going into underbanked areas, higher service levels. I think a lot of these advantages and secular positives are over and done with. But it's a big industry and a very large weightage in Nifty. So one should be selective, still positive on a few select NBFCs and smaller PSU banks as well, where there's scope for PE re-rating. But the larger private sector banks, I think one needs to be very careful. I don't think they will outperform the index as they have done in the past 20, 30 years or so. That particular phenomena, according to me, is over and done with. I could be wrong for a year, 6 months, a year or so, but I see better opportunities elsewhere.
Dipan, in the past, you've liked Bharti Airtel, and I was just reading, Bharti Airtel has delivered the strongest market performance of any major Indian conglomerate in the last 1 year, Sambat 2081. So the Bharti Group's market capitalization went up by close to 2.5 lakh crore last year. Now, after this kind of a rise, and the stock is anyway at fresh, high levels, would you advocate buying, or is all the good news in the price?
No, Rima, I think that existing investors should remain invested and look to buy into the stock only at corrections. It's now fairly richly valued, but the earnings momentum continues. And if you look at the Nifty stocks, there are only a handful, maybe 10, 15 stocks which can grow double digit and mid-teens, and Bharti Airtel is one of them. Very impressed with Jio's numbers, so it'll get reflected in Bharti Airtel numbers as well, where we should see an improvement in the profitability. And I think that they have got a lot of valuable assets like the African operations, and there are other allied businesses also within Bharti which may do very well. The data center also is going to be maybe a profit driver for the company per se. So right now, I think remain invested and look for buying the stock at corrections. That would be my view.
Okay, all right, Dipan, shorter chat today, but thank you so much for waiting by. You have a good trading session, and greetings of the new year once
Thank you,
again.
and same to you.
All right.